Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial world. And today we are diving into a SPAC filing that is raising some serious questions about its future and who is really driving the bus. Get ready because this report on KRAKacquisition Corp reads like a financial thriller packed with big promises, even bigger risks, and a sponsor team that sounds like they walked straight out of a Silicon Valley venture capital movie. We're talking about a company that wants to merge with another business. But right now, it is essentially a shell company with big plans and even bigger questions about where all that money will go and who benefits. Before we jump in, if you love getting straight talk about what is really going on behind the numbers in these corporate filings, do us a solid and hit that subscribe button. And hey, we have a thriving community discussing these filings on Discord. Link in the description below. Join us. So, KRAKacquisition Corp is filing its registration statement to go public. Think of this as the company's official introduction, telling everyone what it plans to do and how it hopes to make money. It is a special purpose acquisition company, or SPAC for short, which is basically a company that exists solely to buy or merge with another company. They raise money through an initial public offering like this one, and then they have a limited time, in this case 24 months, to find a company to combine with. If they don't find one, the money goes back to the investors. Right now, they have no specific target in mind. Zilch nada. They are casting a wide net looking for a business to combine with. But they have a particular interest in the digital asset ecosystem. Their mission is to help companies that are building bridges between decentralized finance, or DeFi, and traditional finance, or TradFi, grow in scale, ideally by taking them public. Now, who is backing this venture? Their sponsor is NCTK Sponsor LLC, which is a partnership formed by some big names: Kraken, a major crypto platform; Tribe Capital, a venture firm focused on fintech and crypto; and Natural Capital, an investment firm with experienced operators. Collectively, they believe their combined expertise gives them an edge in finding and executing a deal. And here is where it gets interesting for the sponsor. They've bought a significant chunk of Class B ordinary shares, also known as founder shares, for a ridiculously low price, think less than half a cent per share. This can create a huge incentive for them to get any deal done, even if it is not the best for the public shareholders. We'll dig into that dilution later. Let's look at the numbers because this is where the rubber meets the road. In this table, they're showing us the dilution, which is how much owning a piece of the company gets spread out thanks to all these shares and warrants. If everything goes as planned, the public offering price is $10 per unit, but right now, the adjusted net tangible book value per share, that is basically what each share is worth on paper after accounting for assets and liabilities, is actually negative $1.09, assuming maximum redemptions. And if the over-allotment option is exercised, it goes up to a negative $1.07. This means if a lot of people decide to get their money back, the value per share could be less than what they paid. Public offering price $10, total $250 million. That is $250 million they're raising from the public. Underwriting discounts and commissions, $0.31 per unit, which adds up to $7,750,000. So after expenses, KRAKacquisition Corp gets $242,250,000. But wait, a big chunk of that $250 million goes straight into a trust account. This trust account is like a safety net, holding the money until they find a company to buy. So out of the $250 million they're raising, $250 million is going into a trust account. That leaves only about $1 million outside of that trust account for working capital and other expenses. That is a pretty thin line of credit for a company looking to buy another business. Remember, this money in the trust account is meant for the investors if the deal doesn't happen. Let's quickly look at the summary. They are offering 25 million units, each unit containing one class a share and a quarter of a warrant. Each whole warrant lets you buy a share for $11.5 down the line. This whole SPAC structure, especially with a company focused on the digital asset space, is super interesting because it is a whole new frontier for finance. And KRAKacquisition Corp is betting big on it. They are upfront about being a blank check company, meaning they are essentially a blank slate to acquire a business. Their mission to bridge DeFi and TradFi is ambitious. They're not just looking for any company, they want businesses building the core infrastructure of the digital asset economy. Their investment thesis makes a compelling argument for why now. With inflation eating away at the value of traditional money, they argue that new financial instruments and innovations like digital assets are the next big thing, just like Dutch East India Company shares or junk bonds were in their time. They point to a massive inflow of private investment into digital assets and a collective cryptocurrency market cap exceeding $3 trillion by late 2025. The involvement of Kraken as a sponsor is a big deal. They're offering deep ecosystem access, enhanced diligence, proven operating experience, and regulatory expertise. This is a significant advantage as Kraken has navigated complex regulatory landscapes globally. The management team is a powerhouse of experience. Ravi Tanaku, the CEO, has a background in venture capital, working on several successful SPACs with major tech companies. Sahil Gupta, the CFO, has extensive experience in fintech and digital assets, including a stint at Kraken. The director nominees also boast impressive resumes in venture capital, tech, and the crypto space. Looking at their prior SPAC experience, Ravi Tanaku was an advisor on several notable SPACs that merged with companies like Opendoor, Clover Health, and Sophie Technologies. This track record suggests they know how to navigate the SPAC world. But as with any SPAC, the risks are substantial. The filing dedicates a huge section to risk factors, and it is not for the faint of heart. They highlight the risk of not finding a suitable business combination within their 24-month timeframe, which means investors might only get their initial investment back, and the warrants could expire worthless. There is also the risk that their own sponsor and affiliates might buy shares from public shareholders, potentially influencing the vote on a business combination. This could reduce the number of shares available for public trading, which is called the float, and might make it harder to maintain a listing on a stock exchange. A key risk for warrant holders is that they can't exercise their warrants unless the underlying shares are registered and a prospectus is available. This process can be complicated and might not be in place when a warrant holder wants to cash in, potentially making those warrants worthless. Then there is the dilution factor. The founder shares were bought for next to nothing, and the private placement warrants also come with a low price. When these convert or are exercised, it can significantly dilute the value of shares held by public investors. The filing shows that with maximum redemptions, the adjusted net tangible book value per share can even go negative. That is a harsh reality check for potential investors. The collaboration with Kraken is definitely a highlight. Kraken isn't just a sponsor, they're a major player in crypto, and their involvement could bring significant deal flow and expertise. However, the digital asset space itself is fraught with regulatory uncertainty and price volatility, which are major risks for any company venturing into it. Looking at the sponsor's investment, they're putting in $2,275,000 in total for founder shares and private placement warrants. Given their low entry price on founder shares, even a modest acquisition valuation could mean a massive profit for them, potentially as high as $34 million in the example provided, even if public shareholders see their investment decline. This creates a clear incentive for the sponsor to make a deal, any deal, to protect their own investment. Let's briefly touch on the financials. As of the 30th of September 2025, the company has a working capital deficiency of over $479,000. That starkly contrasts with the as-adjusted figure after the offering, which shows a positive working capital of over $716,000. This highlights how crucial the upcoming IPO is for their survival. Their net loss is also a key figure. For the period ending the 30th of September 2025, they reported a loss of over $83,000. And for the shorter period ending the 6th of August 2025, it was $8,000. These numbers are small because the company is just starting, but they show early operational expenses even before a business combination. The company's legal structure based in the Cayman Islands offers certain tax advantages, but also presents some challenges for us investors regarding legal protections and regulatory oversight. They're also subject to PFIC rules, which can mean complicated and unfavorable tax consequences for us investors if the company is deemed a passive foreign investment company. On the whole, KRAKacquisition Corp is a high-risk, high-reward play. The team is experienced and the focus on the digital asset space is timely. However, the inherent risks of SPACs combined with the potential for significant dilution from the sponsor's founder shares and the speculative nature of the digital asset market mean investors need to tread very carefully. The success of this venture hinges entirely on their ability to find and execute a good business combination within their strict timeline and navigate the complex regulatory and market landscape of digital assets. What do you think about this SPAC and their digital asset focus? Let me know your thoughts in the comments below. If you found this deep dive helpful, hit that like button and subscribe for more financial insights, and don't forget to join our Discord for more discussions. Thanks for watching, and we'll see you in the next one.